apparently we're going to build a lot of nuclear reactors. You know how the IEA, instead of talking about how to balance energy markets, went to this whole, how are we going to net zero? And now they've just woke up and gone, okay, we kind of got ahead of ourselves. This is an industry where everyone wants to be third. They want to build the third reactor. They don't want to build the first or the second. And I just think this is the issue with nuclear right now is.
Another week, more mining news, more things that we did not expect would happen this week. And we're joined by a marsupial who is not Australian. I'm constantly confused by your wannabe identity, Mr. Koala. Thank you so much for joining us for our weekly wrap.
I've been on the road for 3 weeks. Has anything interesting happened?
That's why we dialed you in to find out what you found out that has been interesting on the road. So we're going to talk about all the Beaver Creek you've been to very recently. I know you're obsessed with the majors, and especially when the majors do a dance together. And we've finally seen a big dance between Anglo and Teck. We're going to get your thoughts on that. The market is frothy, so we're going to go through all of that. And with grade control, JD, we've got a wild list of things going on, like Ivanhoe with Qatar. We've got to talk about Barrick's Fourmile. That's just an amazing deposit. And sweet deal, sour deal, we'll deliver again.
And plenty to run through. Koala, why don't you kick us off, mate? As Trav said, you have been to Beaver Creek amongst a couple other conferences in the recent past. So what's the temperature of the market? What's the chatter around the conference halls telling you at the moment?
Look, Beaver Creek is a town, a village that I joked to a few people, I feel like I'm in Epcot, Switzerland, but there's a sister village called Bachelor Gulch where a few of us were staying. And basically, across all of these villages, there is a free shuttle that you can summon on an app on your phone. I stress this into the way to say that these locations, even though we're off season, are places that for an industry that destroys value as much as it creates value, we really have no business holding conferences there. And given it is the Beaver Creek Precious Metals Summit, and what I just said about these real estate locations, you can imagine the cost. I paid $7 for a club soda at 3 p.m. in the Park Hyatt lobby bar in Beaver Creek. So maybe the gold price is telling us something about inflation, but more importantly, the best way I can sum up sentiment is I heard no one complaining about the cost of attending the conference at the Beaver Creek Precious Metals Summit. Not a one.
How about the sort of sense of euphoria though? Because I was actually just chatting with someone from sort of stateside before, and their sort of commentary was that it wasn't as frothy. No one's complaining about the gold price. Everyone's chuffed and the producers are making money. But that sense of euphoria, what was that sort of like there?
I think everyone's say that they've seen bigger parties. But you have to remember with every cycle, there's evolutions of the sector investors. You have new people, but you have the memories of the last cycle. I don't know. I just, you guys know I came into the business on the back of the China super cycle. So I'm kind of used to having a realistic, realpolitik view through cycle economics. And you could just kind of see one of the metaphors I'm using is out of 20 projects, one will make a pile of money, one will return your capital, but not your time, and 18 belongs somewhere in Dante's Inferno. And you just kind of felt that everyone felt the majority of projects were going to be lovely. It's a weird feeling if you've been through a cycle in our business before, but it's a very precious metals specific thing. And who knows, maybe this is a mega re-rate. Maybe Tether is going to buy a year's worth of production with all of their profits. I don't know, but you can recognize when you're like, okay, this is a little strange.
There are two specific things I wanted to tease out of you from Beaver Creek. One is I think you and I share a common view on the attractiveness of IM Gold from an acquisition perspective, particularly Cote and obviously, the West African assets need to be dealt with. But running into Beaver Creek, that, IM Gold had a tremendous run. Did you get any sort of sense that there's going to be an outcome for IM Gold in the near future?
I think the base case was always that it was probably happening in 12 months at the next Denver Gold Forum, or some point in the next 12 months. Maybe someone wants to get proactive and come in earlier, but it seems like it's very clear that the senior gold producer of Canada is ready to come over the top on anyone who wants to step foot in their neighborhood. The question is when.
100%. Yeah.
Look,
Yeah.
I kind of was seeing the way the stock was trading throughout August post the 2Q results, and frankly, through September, there's no October Cote site visit. You kind of looked around and was like, oh God, is someone actually going to take a run at these guys and find a way to try to make it so Agnico can't do the deal? And it didn't happen. Look, the exploration results were incredible, but that came out on their Negel and Monster project. But let's just call a spade here. It seems to me like Jackson Hole, where Powell signaled that he was going to cut rates, supercharged this rally straight into Denver Gold. And you saw it in what's the joke? The first reaction to the Fed's the wrong reaction. First we popped, then we dropped. And I was like, okay, well, now what? The EBITDA per ounce of some of these majors has been remarkably consistent throughout the years. And now we look at it and you take ASIC, you take spot gold, and you go, all right, we have 2x the margin of these companies. And the reality is, if gold's going to stay at the spot price, that's telling you something about inflation. That's telling you about where costs are going to go. I mean, if you're going to run spot, you should really run 3,000 an ounce, not 3,600 if you're trying to do a NAV analysis.
Yeah, I do think everyone kind of underappreciates the effect of inflation to what margin of these like gold miners might be over time. But having said that, everyone's not running a spot case, and no one's doing deals based off a spot case. Like the corporates have a fear of paying too much still, and everyone's being conservative with a price deck. But I think you've got to be more aggressive on your price deck, but also much more aggressive on your inflation expectations for costs in a sense too, which nullifies some of the price upside.
Absolutely. I would just close off that point, Travis, though, that you really felt that if you weren't in the party, you were missing out. There was a FOMO dynamic that was extremely unique and very rare. And yeah.
FOMO drives deals, mate. The other thing I wanted to ask you about was I did notice you tweet when asked about your best ideas from Beaver Creek. You cited McEwen and also Saturn Metals. I was surprised to see Saturn there, but please elaborate on both.
On the first one, I think that sometimes the most beautiful music and the most powerful speech is what's left unsaid. And on Saturn, what I would say is it's a very fascinating puzzle because it's a lower grade, open pittable, and apparently heap leachable surf operation in WA. And it's free gold in quartz, but with no sulfides. So you grind to a pulp, you leach it, and you sit there and you go, okay, it's trading at one of those P/NAV discounts where you go, someone's as smart as me or even half as smart as me would have picked up on this at this point. And the only excuse I'm able to get so far, and I'm trying to pull up all the metallurgical and flowsheet work I can on it, is, oh yeah, there's not a lot of heap leaches in WA. This just isn't how WA gold fields work. So still doing the work, kicking the tires, and we'll see. We'll see. But it jumped off the page as I went into the meeting very explicitly just going, your valuation implies there's a critical problem here. And I came out of it going, I got to find the flaw in the flow sheet. And if there's no flaw in the flow sheet, you Aussies are just getting lazy. And given how much you Aussies were willing to come all the way to Quebec for a great lithium discovery in the next Greenbushes less than 5 years ago, I don't know you guys to be lazy when it comes to traveling abroad. And it's right in your
We're
backyard.
we're scared of we're scared of heap leaches. That's for sure. Even though we've got a tremendous history of heap leach operations, and and yeah, and this gold price, you can get away with a lot more. And so I do think if like all else stays constant, Saturn will get financed.
No, just you look at the call it the elevated gold price they use in their deck for an updated NAV, and it's a joke of it's a massive
Talk.
discount. It's a massive discount compared to
Yeah.
the actual spot gold price. So even if when you do the haircuts, you go, okay, this thing's trading like Northern Dynasty, and you're like, is it Northern Dynasty? No, just saying, like it's trading one of those discounts where you're like, there's got to be something wrong with it. And so far, I haven't found the flaw. And I spent the whole meeting on that. Like, where do you find in a gold euphoria in a first world jurisdiction 2.5 million ounces where there's a clear line of sight to 3 million ounces of heap leachable gold? And by the way, last I checked, WA is a goddamn desert. So I can't think of a better place to do a heap leach because I've seen them in Nevada and I've seen them in Arizona. A desert's a desert.
The other thing with heap leaches, mate, is disappointing. They're not going to need sandvik ground support.
There must be one of the few gold miners in the state, in the country, that wouldn't need Sandvik ground support, because we know Sandvik ground support supports the entire gold industry in Australia right now.
Underground ones, yeah.
Underground mines, yeah. And mate, we are getting to go out to the magnificent QDAO site where they
Imminent.
hundreds of employees working day and night to keep the West Australian gold industry fighting. And we know they've got these manufacturing hubs all around the world. So there's people in every kind of pocket of the earth fighting to keep everyone going.
Mate,
be
we
it a
got
gold mine, be it a base metal mine.
We got an email from a base metal miner in North America recently saying, I love that Sandvik sponsors you because we use Sandvik ground support in our base metals mine. So it's a global phenomenon, mate.
It is. And why not get on board and use the best ground support in the industry? Get in touch with Sandvik ground support and put an order in today, whether you want to do it on the app or just give Derek Hurd a call. Details in the show notes, mate.
Bolts, mesh, and all of the rest, mate. Sandvik ground support.
Go Sandvik. How is the temperature in uranium land when you ventured over there a couple of weeks ago? Obviously, the big sort of shindig they've got every year.
Apparently, we're going to build a lot of nuclear reactors. I haven't seen an FID on any of them, but it's funny. Like, just freestyling with you guys here. You know how the IEA was talking about, instead of talking about how to balance energy markets, went to this whole how are we going to net zero the energy market from an emissions perspective? And now they've just woken up and gone, okay, we kind of got ahead of ourselves. Um, I just see this whole, oh, we're going to have this huge call on nuclear demand growth. And no one's actually taken a step back, it seems like, and gone, okay, where's Vogel 5, 6, 7, 8 in Georgia? Who is actually, and I think it was Cameco's CFO Grant Isaac. I heard this second, third hand, basically said this is an industry where everyone wants to be third. They want to build the third reactor. They don't want to build the first or the second. And I just think this is the issue with nuclear right now is we know China's got the teams building and everything, but where is the Western will to redevelop this skill and build these reactors and then give the capital the return it needs to justify it? So it's fun. We'll see. But
Yeah, I mean, if you look at
Sprott's raising
Vogel,
piles of money and the financial reactor's humming and yeah, it's don't really have any involvement in that sector right now. In hindsight, I should just have bought Kazatomprom in size and never said a goddamn word about uranium ever again.
yeah, it's fascinating. I mean, to the point of building the third reactor, we've seen the first, if you like, reactors built in Vogel and in the UK as well, and the the bill that came back was a bit bigger than most people were expecting. So maybe we're a bit traumatized on that front.
Oh, I'm sorry. I mean, will you actually get it back in all the cash flow? I mean, when are we going to get a full payback on QB2? It's not like we know. Actually, those of us who've been around a cycle realize that there's not a lot of people who know actually to build these things right and tight and on time.
We'll have to keep waiting for those unit SMRs to be firing out the back of the factory.
But there are stories that we all want to believe, and we want to believe the dream. And you're not going to convince everyone, but like everyone's convinced we're going to build all these reactors. Totally there for it. But don't we see an FID or two?
I think uranium's like one of the more enticing kind of parts of the market right now, only because like everyone's attention is in precious, and yeah, uranium's like relatively quiet, even though it's just full of very retail kind of sentiment crowd, but they're relatively quiet right now. So I'm like kind of just based on that, somewhat drawn to opportunities there.
I wonder if that's the mining kind of perspective though as well, right? Because if you come at it from the tech slant and the people talking about data centers and these types of things, they still talk a fair bit about getting the reactors to power the data centers for the AI kind of rollout. It's just us in the mining world are a bit more preoccupied with precious metals at the minute.
Well, no.
Who knows? It's hard to measure these things.
Well, it's also a snapback to reality. If you've created an app that has a marginal cost of zero because it's just replicated in an app store, call me up when Zuckerberg is actually financing a nuclear reactor. Like, we're just talking about a different game here. It's different ROICs, it's a different spreadsheet, it's a different level of complexity. This isn't code, this is atoms, this is regulations, this is physical things. It's not just the dopamine in our heads anymore.
This is totally true, but I would say the kind of circa 500 billion in capex that the big tech group together is spending, had you said that 5 years ago, that would have been pretty jaw-dropping for most people to try and take on board that these guys would collectively spend that much in capex. That's a complete kind of dynamic change, don't you think?
Let's see what the return is on it. They're chasing a thematic. Facebook.
I'm not arguing that it'll be a good return, for sure.
Meta used to be called Facebook. Now Meta is going to be an AI. What are we calling these? Super cyclers, super adopters, hyperscalers. They're hyperscalers.
Hyperscalers.
I mean, at the end of the day, the funny thing is, just given where I'm going tomorrow for a site visit, why couldn't we do solar with a lithium-ion battery and probably undercut nuclear? That's both a lithium and a cesium plug.
we could unpack a whole nother debate there, but to move us onto the track and the topics we wanted to unpack, the frothiness in the market is something that Trav and I have both noticed kind of astoundingly in small sort of pockets of the market here. It's been pretty astounding.
There's like some big pockets of the market.
Well, it's very fragmented, but
if you're an exploration neurology play with something in the US, and if you got to, like, if you're just near a rare earth thing, like, oh my god,
you're near the White House and the
near the White House.
Did we ever?
Did we ever an OTC US listing? Like,
did we ever actually see that interview where Senator Burgum actually said that Coliseum was a mission critical asset? My first site visit was Mountain
Astounding.
Pass. It is truly the greatest thing in the world to watch right now. Like, I'm sorry,
that's amazing.
I'm breaking. It's so. I'm not going to.
We've got to play.
I promise myself I'm not going to.
We've got to play the Loxley video.
So you've got obviously like Dateline, $1 billion market cap now. Lockersley is like 3,000% return on neurology to Dateline and MP. And did you catch the music video? I'll snip it in now. I'll play a little bit of that.
You sent. I don't know Loxley, so educate me, guys. I'm prepared on the others, but educate me.
I don't have much to add here other than this. It's like I could talk about the project, but we're not going to be talking about much, right? We're just like it's just like meme stock. This is meme stock stuff. This is retail mania.
Every announcement is a map, and on one side you've got Dateline, tenement on one side, and then the other side you've got Mountain Pass. That's all you need to know about it, and there's no better time to play the latest music video from this company.
In the ground, RE's next door, Loxley and Mojave bringing you more. America needs supply, yo, the time is now. Mind the market, LKY show you how. Mojave corridor, rapping with the beat right next to MP. America needs supply, don't front, don't wait. Loxley's got the key, trying to feed the whole state. We got what's underneath, got antimony and we be carrying the heat. We got what's best for the future and stacked with Reese. How we always playing it clean, rice on the tech, new process, brand new, something that has never been done or seen. Yo, government, where you at? Time to step in line. You want sovereignty? Well, this is the sign to step aside. Well, we work hard under this heat. We keep it on shore. Loxley got the medals, and we bringing you more.
Hilarious. Yeah,
It's a bull market.
This is big bull market behavior. I'm just tempted to sell most of my portfolio and just like leave whatever I've got left in just the dumbest stuff possible, because it's like you don't get rewarded for being smart in this market.
We never actually spoke too much about it, but like just for a second on the MP Materials deal, Koala, like how did you sort of think about the structure? And you sort of base yourself in a different part of the world to us. What was the feeling around that deal?
The U.S. has decided to play by China's rules. I think it's a good industrial policy. If I could change anything as I understand the deal, the one thing I would change is I would not have made it a financial backstop where if MP sells their NdPr products for 90, they get a check for 20 to true it up to 110. I would have done it as a minimum physical offtake, where if you can't sell it for that number, you can sell it to us, the US government, and I would have created a stockpile. I think it has totally revolutionized how we think about strategic minerals. I think, unfortunately, also it has inspired greed where prudence should always still have a seat at the table in multiple of these situations. But it's a good deal. I think there will be more of them.
I think you're right. Should we unpack the Anglo Teck deal now? I'm curious to.
Sorry, more of them in Dateline, surely. I'm sorry. We know how the story ends.
What else are we going to touch on the other speculative froths or not?
Oh, you want to talk about the scandium one? Well, this is interesting. I'm like, my God, like we all know how small the scandium market is, but you put Friedland behind something, and there's just a rocket ship, and then Friedland's rocket ship back solves the value, because then you get the US government involved as well. Like,
it marries up plenty of parts of the conversation we're going to have today, right?
Yeah. In so many ways, Jonas, in so many ways. Look, here's the conundrum. The lead times to get scandium into, and it is an absolutely miracle metal. You adopt it in alloys, you put it in Bloom Energy, Bloom boxes, and you can see what the BE is, the ticker in the US. You can see how that stock's doing. They need scandium oxide in their boxes, and they're probably the biggest consumer of scandium right now in the Western world. I look at all of this, and there's a clear case for a Western like scandium boom. The problem is the chicken and egg. It always has been that you need the security of supply at a price, but no one wants to do the R&D and the certification at Airbus or Boeing to then incorporate it if they don't know they can actually get the material. With that said, Sunrise, it has some very nice high grades. There's a 600 gram per ton cutoff. There's a 300 gram per ton cutoff. Without getting into the look, Burra next door, Ningen right up the road, 155 gram per ton cutoff. The 300 gram per ton at Sunrise is about a 470 from memory gram per ton reserve, about 1.7 million tons. Ningen's 410 at 1.4. Look, if we're actually going to have scandium, those assets in the what I'll call the Fifield, Dubbo, Ningen belt can provide the next century of scandium for the Western world. But realistically, it's going to require government support so that the consumers understand that the supply will be there and are therefore willing to pay the price that will incentivize the private capital to go to build those assets. But having walked around a few cattle paddocks, 2 hours drive outside of Dubbo, these things are going to be really easy to build once the policy is there. Simple as that.
I feel like there's this disconnect between like, you know, what equity investors should expect versus like there's all this like euphoria at the moment because government's suddenly kind of maybe potentially underpinning the economics for equity holders, but I don't have the same level of confidence that it works out that way for equity holders. Like you bring on new supply into a small market in any market.
Well, look, NioCorp with Elk Creek has raised over $100 million of fresh capital in the last 4 months. SRL Sunrise is roofed, for lack of a better term. It's if you can create pizzazz, you can create stories. At the end of the day, the way our industry, and this is something I've been workshopping and I'll share it with you guys, is because tech every cycle creates incredible amounts of value and wealth, people stay in the sector. So with every passing cycle in technology, the average IQ, the median IQ actually gets higher. In our industry, with every cycle, there's about a base of specialists. And at the peak of the cycle, 5 to 10x of the specialists are generalists in their first cycle, and they then get washed out. A few stay around as specialists, but the reality is, if you think about what I'll call the historical IQ and trauma of the investors in our sector, at the bottom of the cycle, it's just guys like you and me. At the top, our capital is dwarfed by people who think they know so much more than us, but have not seen a cycle before. And if they get burnt, they'll never come back again. So it's really like almost looking at shale decline curves. So you have this small base of investors, and on top of it, people with so much more capital when our sector gets going, but they don't want to listen, or I'd say there's a hubris. There's an actual hubris.
It's something fascinating to think about. I can't help but think about how interest rates and the like over the last 15 plus years have distorted those cycles with just, you know, a zero interest rate policy for nigh on a decade and stuff has pushed the kind of classical cycle completely out of whack to the advantage of tech and the like.
Speaking of tech, shall we?
Let's jump in. What's your first pass thoughts?
Why not just do the joint venture? How screwed is QB2 that they feel compelled to do this deal? And what compelled Anglo to do this deal? Why couldn't Duncan, Jonathan, and Gary just got in the room and agreed on a QB2 Koala joint venture? Minus the fact, of course, that we don't yet know how much capital and what is need to be done for QB2 to be finished, for lack of a better word, or rescoped. I mean, if I was Gary, and from my voice, you can tell I'm not. My big question when it comes time for the joint venture conversation is going to be, Well, has QB2 performed? Has it hit a budget or hit a operating plan at all? Because I'm 44 of Coalasi, Mitsui's 12. Mitsui's not Sumitomo, the tax partner at QB2. So how do we know what the NAV split should be on this joint venture until we see how QB2 performs? So it's missed multiple budgets. And that's why I kind of keep coming back to this thought that it feels like this is a merger of panic on both sides because Anglo, I speculating completely, but probably felt like they had to do something, or it was E or B, and Tech. I mean, Danny Mulchuk was added as a special advisor a week before this deal, and it sounds like QB2 actually third quarter 2025 results for Tech are going to be must watch, must listen conference call, because tell us again what the new number is to get QB2 to spec. And I empathize with Jonathan. This was not his project. He got brought in as CFO and heir apparent to Don Lindsay. Don Lindsay's the one agreeing with this project. And I think his one mistake in all of this is that he didn't stand up to the board when Glencore came knocking. He should have said, let's just do the deal. But I also then have to say, you look at where Tech stands today, and because of the coal price where Glencore is, that looks like a smart move. But at the end of the day, this is, I mean, the Bloomberg article about how this all came together a day after it got announced openly said Keevil made it clear that he would not approve any deal that didn't involve Tech being headquartered, the surviving company being headquartered in Canada, which for a company that has, okay, Trail, which is their smelter in Canada for zinc, plus Red Dog, which is going to hit a wall in about 5 years because they haven't gotten a deal to do the expansions and the brownfield. The zinc business of Tech is maybe worth $1 billion, $2 billion, reflecting the fact that Trail, a zinc smelter that's been around for decades in Canada, no one's buying that in and of itself. So the only actual NAV of value in Canada is Highland Valley, which isn't that great. So the audacity to have a company call itself a Canadian champion after they sold their Canadian crown jewels to Glencore, with who their chairman emeritus crucified in the press. Like, there's a lack of self-awareness about what this company is. And that's why I joked. If I was the Chileans, I would say, hey,
I mean, you could say the same about like
You could say
Anglo
that-
headquarters in London. Like, you know what I mean? Like there's and like whether Keevil demanded that or not, the Canadian government was going to have like more onerous demands about
sure,
about the commitments to Canada.
The reason the Canadian government has these demands is because of what Keevil said with Glencore Tech in 2023. And yet they let Glencore buy the crown jewels of Tech. Tech is not, and this is your headline for that. Tech is not a Canadian company. It's a Chilean company. It's a South American company. And we can also say this for the Lundin Mining or Lundin Gold. They have offices in Vancouver. But if I'm the Chileans, I would be looking around going, hey, QB2, Coalasi, Los Bronces with the Andina joint venture. Hey guys, Anglo, you have a big office here. Why isn't Santiago the headquarters of Anglo Teck? If we're going to get nationalist, let's talk. Let's really get into it. So,
Well, that was one of the defining features of the deal, right?
For Rio Tinto, you could say that for so many companies.
Yeah. Yes. I agree with you. Like
not for nothing, guys. On Rio, between the Brits and your country folk, without getting into all the nuances of Jukin Gorge, you guys ran out of town a French CEO who created a ton of value at Rio by not buying copper and just buying back stock when everyone thought consensus iron ore was $50-$60. All of this, I'm just saying it's a crazy little nuance of all of this. But look, I think if I had to say, it's clear no one's coming for Tech. I think Tech shareholders have to decide if they want to do a deal now or they want to wait till 2029 when Keevil has no say anymore. And I think if you're a Tech shareholder, obviously you can vote by just selling your stock. But it's a function of you need to see what this QB2 update and plan looks like and how confident you are in it. If it looks really messy, you are going to go, yeah, let's do a deal. But if you're an Anglo shareholder, you're going to be very curious how much QB2 is going to cost to get to plan. And you're also then going to, I struggle to get to all the valuations. I know copper trades at a pure play. But if this deal all does come together, I think if a no interloper shows up, it'll show up on the Anglo side. I think the valuations of both of these companies, I think if you're the BHP or the Rio boards, it's really hard to justify paying these numbers. Which is why, if I had to come it all together, I think Gary will extract a pound of flesh for the joint venture to actually happen at Koala. If this deal does happen, I think this combined company is probably going to become a new Antofagasta. And by that, I mean, probably becomes a funding short for a lot of folks because, yeah, we then have to take the risk of QB2 plus the joint venture integration. Because the reason the stocks went up on the deal is it's all about QB2 Colossi, which is why I keep going back to, if we all were rational and we were all thoughtful here, this should have been just the QB2 Colossi joint venture, the way Mark Bristow and Gary Goldberg did the Nevada Gold Mines joint venture several years ago. But if you take QB2 out of an operating asset of Tech and you put it into a joint venture, you have an existential crisis in Vancouver about what is Tech Metals. Which is to say, as all M&A goes, there's ego in history.
Oh, for sure. So, like on the Tech side, you've got a big funding issue that you're coming across. Now, I'm sure Anglo has been shared with enough information to form a view on what that funding gap does look like, enough for them to have a degree of confidence to pay a $4.9 billion special dividend to shareholders pre-deal completion themselves. But like, so I'm curious why you think that an interloper will show up on the Anglo side when on the Tech side you need a 66.6% threshold on both the A and B class shares to prevent a deal here, and presumably the funding gap on the Tech side could be an attractive angle for an interloper who has a lower cost of capital to get involved.
If I ran BHP, which I never will, and I was looking at this, I would say, okay, even if QB2 took $5 billion more, I can handle that. Like, to get to the promised land. But I look at Anglo's portfolio, Colossi, Quellaveco, you have the Bronces and Dina with all those synergies. You have Minas Rio. Like, you have all assets, you have multiple assets I legitimately want. I would love to have 22% of Antamina, but it's not operating. QB2, I can fund the fix, but at what social cost of Vancouver? Do I have to move everyone there? Like, oh, and then Red Dog, how do you unlock the value there? How can you inherit that situation? It's just a trickier situation. And ideally, eventually, this QB2 Colossi joint venture should happen. And by the way, in 3 years, which, as much as we look at our P&Ls every day, we look at our annual returns, 3 years is a split second in our industry. You fast forward 3 years, Tech would be a sitting duck. So I don't have to deal with Tech now.
With all that kind of said, the share price of Anglo since the BHP deal hasn't sort of performed, despite them sort of making steps towards carving up the business in, like, they sort of broke out.
But the multiples expanded massively.
Yeah, well,
They've yeah.
the pre-announcement, BHP was 21.50 in London. Anglo was like 22 and a half. Anglo went to 25. BHP went down to 20 because people were wondering if BHP is going to come over. You back out the special dividend, Anglo goes back to sub 22. That's 1.10. I mean, what was the proposal for at the time? It was 0.89 plus the Spinco share. So we could back out Kumba in there as well, but that's, I'm sure BHP is going to have that conversation. And if I had my druthers, I think BHP should have a very serious conversation about, do you buy Anglo and you say we're going to let Escondida gracefully go into middle age with 2 concentrators, not 3, even if it takes it higher up the cost curve. Because ironically, that would probably create the copper super cycle that would pay for the whole deal. And then you do the 3rd concentrator in 10 years. But that's great spreadsheet math. I'm not sure if it's socially palatable.
Alrighty, I reckon we move to our grade control. Koala, this might be your first time joining us for grade control, but I trust you understand the concept. We're just going to run through a couple of corporate things that we've seen throughout the week and give them a grade of A to F. Better kick us off.
Alrighty, let's do it. So first story is the US International Development Finance Corp looking to establish a up to $5 billion joint venture fund with Orion. So both parties here would be contributing an equal share over time, like I said, sort of scaling up, and all these sort of buzzwords that we've seen for a long time now. Critical minerals focus aimed at reducing supply anxiety, China, the elephant in the room there. Also with sort of similar structure to a deal that Orion did with the Abu Dhabi Sovereign Fund not too long ago. I found, I'm not sure about you guys, surprisingly little coverage of this, given the context of what we've been talking about with sort of government influence lately. But a fund of this sort of size would be the largest type structure and investment unit that we've seen in the mining space in quite a while. So the wording around it sort of made you think of it as another kind of arm for the US government to do deals in the metal space and large-scale deals at that. So I would be super curious to see the deal structure, kind of like you touched on before with MP Materials there, Koala. If we're just talking plain vanilla equity stakes, project stakes, these sorts of things, it kind of leaves a bit to be desired in my eyes, because you need to leave the incentives in the West at sort of strong. Like we don't want to end up in a place where it's completely kind of China-ish with state-owned entities and the like. I think that's the real risk of disruption. So as for a rating, I'll chuck a B to this one for the ambition, because obviously we're just talking about something here, and I think the eventual structure that it takes is super vital. Koala, over to you.
E minus. We need this fund. And I have a ton of respect for Oscar, Dominic, Estevan, and the team at Orion. But the US government is not going to put money into a fund like this to make 12 to 15% or on the great deal of 20% IRR. They're doing this to rebuild a supply chain, and structuring and credit expertise is not where you go find your GP skills for what you're trying to accomplish. You need more equity, operational, venture capital. I will say I would feel so much better if I saw that Friedland, the Ivanhoe group, or the Lundin group were going to be the P's on this, because that would be we're not trying to structure get a royalty and offtake. It would be like, nope, we're going to go find great new deposits. We're going to build great mines. Maybe G might be involved here to build stuff, just to pick a name. Or frankly, if you're to operate stuff better, it's like, I mean, Matt Copper's closing in a month. Go get Mick McMullen, get an operator who's provenly made money and say, so that's the one concern I have, that Orion has built an incredible business, protecting the downside and structuring, but being a GP for the US government is not just about protect the downside. You can do that anyway just because of what your capital is. It's, can you make the mine that is tier 3, tier 1.5 through great operational skill set? So that's where I'm rambling here, but it's a great idea. I'd rate it an A if I knew that it wasn't Orion just as the GP, and you're like, we have great operators coming alongside us. That's the nuance to this.
I give it a B. I think like at least Orion's better equipped to make positive capital allocation decisions in the sector than bureaucrats. And I don't think this will be the last partnership of the sort that we see between established private equity groups and governments. I think we'll see quite a few of these.
And by the way, if Dominic or anyone hears this, all I'm saying is show us who your operators are going to be, because you've built a franchise that can actually partner with the US government, but you do some things incredibly well. But if you tell the US government you can make a 5% IRR, but you can build a critical mineral supply chain for the next 50 years, or you can make 15% but not create that supply chain, and we still have a China dependency, the US government for certain other agendas is not profit maximizing. They're geopolitically maximizing optionality.
I totally agree. That disconnect between the strategic interest and a credit return interest, like you can't quite reconcile them yet. There's a lot to play out there, but we'll move on to the next one. We found out news that Qatar Sovereign Wealth Fund (QIA) is putting $500 million into Ivanhoe mines for a 4% stake at $12 Canadian a share, and the funds are earmarked to support Ivanhoe's exploration and their endeavours to continue to grow into both Africa and parts of Asia. With there's a bit of like this. You didn't see this one coming. We didn't see this one coming. It's a big deal. It's a big deal. It's a big new shareholder. I give this one an A. I mean, we had Willow on a couple of weeks ago, and he talked about this theme of a multipolar world, and having these kind of like sovereign sources of capital really coming into the sector. They've got much lower cost of capital, and I just see this investment from QIA as kind of like lighting a fire under the optionality that Friedland has with Ivanhoe.
This one's absolutely an A. I think there is a couple of question marks out there about the discount, but like Friedland's just the master of his register. There's 45-ish% in three hands, which he's obviously very close with. 4% dilution, not massive in the scheme of things, with obviously the challenges they've had in recent times, as well as just sort of pulling capital out of parts of the world that historically haven't been massive financiers of mining projects. How about you?
This is an A. Everyone was waste Kakula 26-27 guide, and now it doesn't really matter. Robert, at the core, besides being one of the most brilliant people in the industry, is one of the best people in the world. He is not going to do this deal with the Qataris and then embarrass them with the guidance. Now, when we look at the guide, when it comes, even if free cash flow isn't quite what we want it to be in 2026, and the inflections in 2027, he's injected incredible capital into the business. So what it doesn't matter anymore. And there's so much optionality in the portfolio at Ivanhoe that whether it's the Western Forelands or the stuff in Kazakhstan, which they did a news release on a couple weeks ago, frankly, I think they could have been more bullish. That's just me. Ding, ding, ding. But I would say that the one surprise here, it's the Qataris, not the Saudis. But A plus all around.
Clean sweep of A's there. Next story, guys, is BHP, and this one sort of broadened out with Anglo's decision, but they are shutting down Saraji in the Bowen Basin, Saraji South. 750 jobs are going from BHP, as well as making the threat of shutting down their training academy. And then you sort of see within about 5 minutes, Anglo come out and make a call that sort of roughly 200 jobs will unfortunately go, as well as they grapple with royalties, low coal prices, and the like there in Queensland. So, yeah, a lot of politicking with this one with BHP. Obviously, they're playing real hardball. We sort of saw the comments from Mike Henry really highlighting how if you chop away the couple good years of returns that you get in the mining industry every decade, then it's not worth gritting your teeth through the other 6-7 years of the kind of cycle.
Who are we scoring?
Incredibly,
Who are we scoring on this, by the way? Are we scoring BA? Are we scoring the policy, or like what? Who are we scoring here?
Yeah. I'm gonna score the politicians because
take it any which way you like, and yeah, not to be super political, because I think it's across the board. I think it's bipartisan, and it's a D, because one party brings it in, the other party is happy in quotation marks to keep the policies. So it's a D on that part, and there just needs to be a lot of understanding in how commodity cycles work. And yeah, it just goes to show how hard cutting out costs of government are once they're sort of bedded in. What are your thoughts?
Got to pay for the Olympics somehow. The question is, are you going to still be in power when they come to town? Look, what was Paul Flynn's line? It's like, it's crazy. We have $200 coal and no one's making money in Queensland.
Yeah.
People 10 years ago would have crawled over broken glass for $200 met coal. I think what BHP is doing is being sensible. It doesn't look like, from the work I've done in the last year or two, it doesn't look like it's that many tons. What I do think it kind of sets off now is a conversation that probably will take several years, probably 2 or 3 years. And you have the Brisbane Olympics, and was it 32, looming over it, which is at some point, these royalties have to be changed. And in all likelihood, there's a lot more pain to come in Queensland before those royalty changes are made. So BHP gets an A in my book. Queensland gets an F. And I would say Gary, when he's going there trying to solve the Mount.NYSE smelter problem, can look at them and say, I haven't shut down a coal mine voluntarily. I've done it because my investors told me I had to get net zero. Well, it's just a real tragedy that Queensland has kind of put a self-inflicted wound with a cash grab at the time. And look, it is what it is. I don't take pleasure in this, even though the royalties in Queensland have reset the cost curve in a way that has made profits for Canadian, US, and other met coal producers incredibly compelling.
Yeah.
This is an
Capital
F.
was mobile.
This is an easy F, because there's a massive cognitive dissonance with politicians who don't understand that capital is mobile. That exact point. There's like, you think you can just erode the entire economics of capital intensive assets, and the capital continues to flow into them. It's not how it works. F to the politicians for just like, you know, thinking that's how economics works. It doesn't. To your point on there's a multi-year conversation about these royalties, I think that's been happening. Like I do think this is actually a very interesting moment that's being exacerbated, and there's like a lot of like light on these royalties right now, and it's building, but no one's really paying attention in our sector because everyone's just focused on gold. But what happens to some of the equities if there's a meaningful change in those royalties in the next 12 months? Like I think the probability of that is not baked in, but I do think there's a higher probability than is being baked into some of those prices.
I think the probability that everyone's assigning to it after the last 24 hours is probably too high of a probability.
Give it a week or so and see what happens. See where people kind of settle. Yeah, nothing's going to happen overnight. The government obviously sort of putting it at nothing changing before 29.30, and maybe we land somewhere in between. Last one on grade control, guys. Barrick's Fourmile. Trav, take us away.
Oh, I was completely oblivious to this project and how special it is. But sometimes you just like read details of a project and you're like, this one just makes me happy, mate. So Barrick, they put out some new numbers on Fourmile. Fourmile was discovered in 2016, and yeah, we got some high level kind of PEA details on the project. This is a freaking beast. I'll give you some of the high level numbers. This 25-year mine life, producing between 650 and 750,000 ounces per annum, at a unit all-in sustaining cost of a midpoint of $700 per ounce. That is crazy. Barrick owns 100% of Fourmile. There are obvious synergies here with the Nevada Gold Mines joint venture, which you mentioned, Koala, was put in place by Bristow back then. When the joint venture was entered into between Newmont and Barrick for the Nevada Gold Mines, Fourmile was excluded, but the JV agreement allowed for Fourmile to be added later if certain agreed investment or commercial feasibility triggers are met. Barrick has said that it anticipates Fourmile to eventually be contributed to Nevada Gold Mines at fair market value if certain criteria are met. Now, the JV agreement kind of gives Barrick the right to roll Fourmile in, and Newmont must either pay or dilute its JV ownership if that happens. Oh, I love the project. Barrick needed a win. This is actually, I think it's a huge deal. This is a special project. This is as tier one as it gets. And it's all Barrick's. And I think it kind of like, there's been a lot of talk lately about Barrick and activist play. There might even be Elliott building a secret position in Barrick right now. That's a rumor going around. And there's a breakup play. We've talked about the breakup play before, but part of that breakup play is Nevada Gold Mines separate entity. And that kind of, with Fourmile ex-Nevada Gold Mines JV, it really sort of sets the scene for an eventual tie-up with Newmont as well.
Sounds like an A.
This is one of the projects. This is an A+++ project.
Or still gets to say, look what I have. A+.
Why is he talking about Rico Dick when, you know what I mean? Like, why'd you take gold out of your name when, like, you got this in your back pocket? Like, what are you doing?
This guy won a Freeport in 2020 and he couldn't get it done. But can you imagine what it must be like to run that company knowing this was sitting in your back pocket and and you realize, oh, this is why I didn't pay the over on Great Bear. This is why I haven't bought anything, even though everyone's begging me to do something. This is why I wouldn't pay 30 when Freeport was 15. I wanted to do a merger and do something friendly, but nil premium. And this is just sitting there.
Crazy.
I think it's one of the snarky jokes I was thinking in my head looking at this when it's like, oh, Newmont's going to write a $4 or $5 billion check to Bristow. It's like, they should probably just call and be like, you want our Lundin Gold stake? Like, let's like, look, just give it, we'll make this easy.
They weren't shy on the wording as well, right? Some of the snippets there, one of the century's greatest discoveries and potential to reset the industry cost curve.
It's true. It's like, it's not an exaggeration either. Like, this is a phenomenal discovery. My God, like,
very keen to see all the numbers come out, that sort of teaser is sort of whetting the appetite, I
The
think.
joys of doing it as a PEA, though, and with an exploration chart, so you could use the inferred, so you could really make it look good. Remember, guys, as we all know, unless there's some major exploration or float sheet innovation, no project ever looks as good as it does on the PEA.
Work down from here. All right, guys, let's sort of fly through sweet deal, sour deal. I think we've got 4 odd ones to run through here. Trav, you kick us off. Sweet or sour? Paladin raising $300 million.
B. Give it a B. Sorry,
Sweet.
I'll give it a sweet. I'll give it a sweet deal. I'm encouraged by the new CEO's more conservative approach to the balance sheet. I also think they're raising at a valuation north of my intrinsic value of Paladin. So if you're raising money above, sweet deal. Use of funds, you look at them, $100 million pen for working capital. So my rule of thumb, whenever you see a use of funds list, and it's always the last line is like working capital, multiply that by at least 2, and that's the real number. No, that's just how I think. So I think $200 million for working capital. So at the end of the day, though, this is still a ramp up raise, and it's only because they've got PLS can they frame it as a growth raise, right? But it's like they're still in ramp up. I think this is a ramp up raise, but there's a new CEO, so I actually just commend someone for having a more conservative approach on the balance sheet. Like why there's debt in that capital structure, like beyond I do not understand. But sweet deal.
There's a million reasons to raise money, but there's only one typically that actually gets you to actually decide to pull the trigger on the deal. B. PLS is the excuse, even if it's probably not the reason they pulled the trigger. And what else are you gonna invest if you're an ASX investor? It's Boss, it's next gen. We don't need to go down that rabbit hole, but even though the project's incredible, yeah, it's a B. Like, makes sense. You call people for playing the game when in the card they have the cards.
Yeah, sweet deal. I think you guys have captured it well. Wipe the slate clean with the new CEO coming in. Next one up, we've got Alamos Gold, the sale of their Turkish assets. So this one might be a bit unfamiliar to Aussies. I'll give a very brief recap. Alamos is an 18 billion in Canadian dollars TSX Goldie. So they've had a great last sort of month that's seen them kick up. This sale is a US $470 million sale to a Turkish conglomerate of 3 development assets that they've got. Now, long backstory here, they've been in Turkey for the better part of a decade and a half. They started construction on one of those 3 development projects in the late 2010s. 2019, they hit a real snag with the government not renewing what seemed a pretty stock standard mine lease renewal. That kicked off, as you'd suspect, a lot of legal back and forth. So all that's to kind of say that analysts out there valued their Turkish assets at next to nothing because there was legal lawsuits in The Hague and other parts going on, with Alamos suing the Turkish government for a lot of money. So the fact that they have got a deal, this $470 million is not overly, contingent on a bunch of different things. It's just time-based. So they get around about a third today, a third in a year, and a third in 2 years' time. And that is backed up with international bank guarantees. So that's a pretty decent outcome in an environment that I think you could quite easily label a seller's environment for goldies out there. To get 470 million US in your pocket when most people had that written down to nothing is quite sweet in my eyes. Koala, you might know this one a bit more than us down here.
A plus both sides. Sometimes you gotta know when you're not the right owner of an asset, and for the local operators and conglomerate on the other side, maybe they can create a lot of value. I think this can be looked back on and look, if the Turks crush it, I don't think anyone's gonna look at Alamos and be like, oh, you left so much money on the table. You gotta know when it's not your party to be at.
Sweet deal.
Well said. Well said. Next one up, Newmont's sale of their coffee project to Fuerte Metals. Quite a junior Fuerte. So Newmont wrapping up the non-core sell down. Obviously, they flagged last year a bunch of assets that were on the on the chopping block, and they've kind of methodically just gone and offloaded all of them. So the price tag, US $150 million, 10 in cash up front, 40 in equity in the junior, plus a 3% NSR, so a royalty that can be repurchased for $100 million. So
love that royalty part of it. I love the ability for the royalty to be bought back entirely. As not a partial buyback, but a full, complete buyback, $100 million. Like I love that part of the royalty.
Super cool, right?
Yeah.
Sweet deal in my eyes. This is a project that's not really moving the dial for Newmont. They're getting paid a fair bit of stock, so they are a 27% owner in Fuerte now, and they got a bit of a kick up because Fuerte just rocketed on this deal, so they see a bit more upside. You know, in the scheme of how big Newmont is, it's pretty small beer, but get it off their books. And for Fuerte, I think it's also a sweet deal. Obviously, the market loved it. Up 70% since last Friday. They've got Pierre Lasson's support, kind of like a lot of those juniors that get a bit of backing, and they are now targeting a feasibility study here for the back half of next year. So all of a sudden, they're a company with a project that could go places in this environment.
Sweet deal. Very clever structuring.
Who are we scoring?
Fuerte, I'm scoring. I just like when a small company can do a big deal without actually having to like fund very much upfront. I just think it's really cool.
100%.
Sour.
Yeah, Koala, your thoughts?
Sour. I think we actually have to have a reflection here, given the keenness in the gold market and the precious metals, whether it's this Hemlo LBO out of Barrick. We go look at all the Wheaton and all the price contingent. And this isn't price contingent with a pile of net cash the way Whitehaven did with BHP. This is brand new companies raising fresh capital and then layering on a very complicated capital structure between streams, price contingent. And I also just like to say there's no such thing as a 100x or a 20x on the spreadsheet at any point in time. You can talk me into a 3x, a 5x. And then something has to happen. Either the coal commodity paradigm has to change, or when the company or the asset has to change to actually give you the next 5x on the 5x. And it seems like we're doing a lot of deals right now where we're basically betting on the gold price is going to go a lot higher in real terms. It's not going to go down. If it goes down, whatever. We bought a call option. And these are assets that some of these assets, coffee particularly, what did it last sell for? $500 million bucks, what Goldcorp paid for it. And I'm going to assume a gold price that's less than half of what it was today. Newmont is not stupid. Like, if you want to play for 4,500 gold and another $1,000 an ounce in the next 12 to 24 months, Fuerte will make you a lot of money. But let's not pretend we're not talking about buying call options, 20, 30% spot price out of the money, probably. Like, I'm not super close to these, but just like, Newmont's letting this go out the door at that price.
So the Hemlo thing I put in a different category, like on the cap. I don't think the cap structure of Fuerte is particularly onerous, purely because the 100 million of the headline number is a 3% NSR, which can be bought back 100% of, and you're only going to do that if like the economics kind of justify it.
So why is Newmont throwing this out the door? Why at these gold prices is Newmont throwing something out the door, which is basically free optionality? Like that's the
I think this is just all part of I think it's just consistent messaging since the moment Newmont acquired Newcrest, and Tom Palmer comes out and in that announcement says we're going to divest non-core assets, and then they provide a list of all of the non-core assets they're going to divest. And I think they're just like following through with what they said they were going to do. Gold prices moved a lot since then. I don't to your point. I do think it is kind of questionable when majors offload their optionality. And yes, there are certain assets that fit to be in majors' portfolios, but there are other majors who take a view of never divesting their optionality. They just hoard it. And Agnico's not for a large part, fits that category. They're not known to sell stuff.
I get selling things that don't move the needle anymore, but yeah, it's just what was the holding cost on coffee? It's a project. It's not a mine. There's not tailings dams. It's one thing to say this mine will never be more than 2% of my EBITDA. So I don't want the liability that comes with it being one of our operations because it doesn't move the needle. That I think we all understand. But how long has Galore Creek sat in the tech portfolio or Shaft Creek? It's just you land bank projects and at 3,600 gold when you've already well exceeded your divestiture objectives. Why?
Yeah. Well, here's another way to frame it. What's Newmont's what's Newmont's stake in Lundin Gold worth, right? And like had the like I do think Newmont maybe understands that there are assets in other companies' portfolios where that's the sole thing, and they retain and they hold shares. Like maybe they'll actually realize a far better return in the process as well.
That was Newcrest Steel, not Newmont's, but yeah.
True.
I do find the nature of sort of giving a list of assets to the market that we're going to kind of sell an interesting kind of dynamic. I kind of understand why they did it. They're sort of non-core assets that aren't massively moving the dial. The market understands where they're going and can sort of factor that all in. It is a kind of interesting strategy to kind of reveal your cards to the person on the other side of the table.
I got one before we do I got one for you guys. Tinker Resources recapitalization.
Yeah. Look, it looks. I'm just not all familiar with the asset or anything, but yeah, I think it's cool to see. I wish Horner and Brandon the best of luck with it. Those guys know the zinc market.
I suspect you've got some thoughts on this one.
I reckon you're a ding 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 on this one, mate.
You have no idea. Look, 20 million tons of high grade, call it 10 plus zinc equivalent. Probably sitting there at I'm gonna butcher the name, Iwalika. Sylvia's gonna get drilled. I think it's just really refreshing for two incredible people, both as people and characters, but also as talents in the business, to look at something so thoughtfully and realize, based on their recent professional experience, that from a 22 million Canadian pre-money basis, you could reframe this and not chase the big tonnage, the big score, the way maybe prior strategics tried to push the management team, and instead say, okay, from where we are today, what is the economic maximizing path? They're clearly a high grade core, but this is something that some really smart people have looked at in the past. It kind of got left by the wayside, and I think this opportunity to give this project a Lazarus moment and reinject some life and get it swimming again with some really thoughtful people who know how to drive deal attention. They know how to drive development. And I know these guys won't sleep until they've done everything in their power to drive a great outcome. First chapter of many.
First chapter of many. Awesome. Mate, thank you for jumping on the show and letting us pick your brain and chatting through everything happening in the mining world.
First, boys. Hopefully I get to your side of the world sooner rather than later.
Always great to chat with the Koala, as always, mate. And
Always?
be it heated discussion.
We only disagreed on one thing today. I was disappointed about that.
Very, very disappointing on that front. But as always, mate, we love picking apart what's going on in the mining world, and there was no shortage of that today. A massive thank you to our partners that make it happen, Sandvik Ground Support, IMARC, the conference coming up on October 21 to October 23 in Sydney, and last but not least, Focus, the platform by MarketTech. Hooroo.
Now remember, I'm an idiot, JD's an idiot. If you thought any of this was anything other than entertainment, you're an idiot, and you need to read out a disclaimer.